Nation's economy growing at a 4.3% annual rate in the third quarter of this year, best number in a couple of years. Comes as consumer confidence is at its lowest level since April. However, Doug Flynn joins us, co-founder of Flynn Capital Management. I'd be less concerned about the consumer because they're still spending than I would be maybe about inflation, which did in the PCE number tick a little higher here, just under 3%. However, this does look like a strong GDP number. Sometimes we say, oh, it's just like a sugar high, inventory buildup or something, but demand looks strong, right? To me, at least, look like a pretty good number. What do you say?
It definitely looked like a strong number, and it was much higher than anyone expected. So I think that was the surprise. It is backward looking, so it's what has already happened. So that's why the market isn't reacting, anything positively too much. But really, the inflation number, the PCE number that the Fed looks at, that's their key target for determining whether they're going to do anything with interest rates. And because that's ticked back up to the high twos again and away from their 2% target, I think the takeaway here is that we might not get that January rate cut that everybody wants us to continue to get. So that's what I think comes out of this, is that the number is strong, and I think they're banking on that continuing with some increase of tax refunds and whatnot so that people feel it, because right now they're not feeling great, even though the numbers seem to say that they should be.
Trump put out a post on social media where he was all over that and, this is the Trump effect and the Fed never did this. You never looked at the Fed before, but we both know we've been looking at the Fed for years and how they would react to this number. Like you said, their target for inflation's 2. The number had been at like 2.6, I think. It went up to 2.9. Right. Correct. So now, what do you do if you forget the politics for a second? Whoever the chairman is of the Federal Reserve going into next year, what kind of does that change your mindset a little or no?
I mean, that's one of the key data points they look at. I think that, when you look at real wages, which is the amount that people keep after inflation, right? So that has started to go positive again. It was positive under Trump 1.0, and then it went negative under Biden because of that high inflation. People couldn't keep up. And now it's started to turn positive again. I think when you get these refunds that people are going to get because they over-withheld during 2025 and they've done some additional tax cuts, they're going to get a refund, and then their withholding is going to get adjusted with the new withholding tables. So people are going to start to see more money in each of their paychecks in 2026. So I think people will start to feel better than they currently do when they have a little bit more money in front of them and in their pocket. But as far as the Fed goes with interest rates, I think it's going to be not as much as Trump would like, and that's why he's trying to put people on there that will help push that along even further.
All right, Doug, thank you very much. Doug Flynn there, just past 4 o'clock.